Happy Monday, folks. Anthony Speciale here with Speciale Analysis for another edition of Unedited and on the Edge of the Market. As we start our week, normally we are going to cover our major market analysis, and that is exactly what we're going to do today. From time to time, it makes sense to wipe the charts and just start from scratch, and that's essentially what I did. It gives you a different perspective of the market. It gives you a fresh, clean look. And sometimes that's just necessary. So if the charts look a little different this week than they did last week, simply because I wipe them clean and reevaluate the data, and that is something that needs to be done from time to time. So we're going to cover that today. We're going to take a look through, again, our major markets: Dow, Nasdaq, S&P, Russell, gold, crude oil, dollar index, and Bitcoin, so that you have some idea of where these key areas of support and resistance may be found, areas of potential reversal or price acceleration. All of these have been published to my TradingView account, where you can access them 100% for free. Again, they are all updated for this week. I wiped every chart clean and started from scratch, so we have a fresh perspective of what we are looking at. So without further ado, I'm going to open the chart and we're going to take a look. So what you have in front of you as the chart opens is the Dow Jones Industrial Average. This is the ticker YM. This is the futures contract. You can also find this on a ETF using the DIA. So these exist here for you. You can see big structure to the upside here, this blue channel. This is essentially where we formed a top. This is where the top had broke, and this is where the top had accelerated to the downside. So we've broken some support here, found a bit of, broken some support here, found a bit of new support. Price has been pushed back up. I believe we should be reactive to this black channel this coming week to see what is next. Meaning, do we hold here and then fall lower, or do we hold here, break through, and potentially break higher? So if we do break and settle above the black line, our next objective would be the orange, followed by the teal. Understanding that the 200-day moving average is essentially running alongside or parallel to this teal structure at the moment, which could easily capture upside pressure. So we're going to see. We're going to essentially watch it. We're going to find out. We're going to see where it takes us from here. Experienced a bit of a relief rally again, if you would. And these are very common to transpire as the market is selling off. Just as though pullbacks are common to occur in an uptrend, relief rallies are common to occur in a downtrend, and that's what we're experiencing. So when we time the acceleration point right to the downside, we make money. When we don't, we hold on to them, and it's a bumpy ride until the market does in fact cooperate. I don't see anything today that exhibits a reversal, at least a overall trend reversal, but we're going to wait and see what happens. So it's just a matter of, again, wiping the chart, starting fresh, taking a clean look to see, as things kind of evolve, that we have a better idea of what's happening, when it's happening, why it's happening. Next up, Nasdaq. Again, big structure to the upside here. Started to break down here. Your impulse, your correction, followed by your impulse, followed by your correction. Slight impulse here. We are holding support along this teal channel. So that's teal channel, although the orange channel is shorter term and much more aggressively angled, the teal channel seems to be the structure that is in fact holding support at the moment. So do we break above? Again, we have another black channel, which is an old structure similar to the Dow we would have to overcome before testing this teal structure. So could we easily get a retracement here? Sure. It would essentially just set a lower high if we came up and retested this area. So it doesn't, until we start to break those series of lower highs and lower lows, we haven't changed the trend. Now, if we were to break through this and start to climb higher, start taking out these prior highs, then we know that our trend has reversed. We're just not there yet. We're all hopeful, but we're just not there yet. Similar picture here on the S&P. COVID low, you can see beautiful uptrend, and then we had turned. So impulse, correction, impulse, correction, impulse. We are reactive at the moment to this teal channel. Looks similar here. We are reacting to this black structure, which is long-term. This essentially contained the initial buying and where the price had sold off from prior to the COVID low. So we will see if this holds or not. If this does, great. If it doesn't, we could work our way down. Our next objective to the downside for the S&P could be towards the 3,300 handle if we keep breaking lower. Now, again, the orange channel is fairly aggressively angled, but it has contained buying. Resistance, 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 resistance. So we'll see. Even if we pop up here, in the coming week, puts us at right at about 4,000. It could then push us back lower if the trend does in fact stay the same. Russell 2000. So, COVID sell-off, big rally to the upside, and then we kind of, I don't want to call it tethered sideways, but we essentially tethered sideways for a good period of time from March of 21 until November 21. So for the better part of 2021, this market kind of just grinded sideways before it had finally dipped off. Orange structure represents the primary channel to the downside. The yellow represents a little more of an aggressive shorter term. You could see resistance, 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 and then support is being found in these areas. We are testing, again, a key structure here, similar to the S&P, where you can see this is what contained price action prior to the COVID sell-off. We are currently testing that right now. So we are reacting to a fairly key level, right where we're at. So just keep that in mind. This is not surprising that we're seeing some bouncing here. It is what it is. Do we break it? I don't know. If it holds and pushes things higher, then we'll have to overcome some resistance above. Essentially, we would need a break, a settle above this conjunction of resistance here to start, pushing our way back higher, overcoming the 200-day moving average, so on and so forth. So it will take a little bit to get us to the upside. This trend, this downside trend in this orange channel remains really intact at the moment, and it's fairly, it's fairly aggressive. It just is what it is. Next up, gold futures. So, for a good period of time from July 2020 until today, June of 22, essentially 11, 12 months, for about a year or so, we have really stayed fairly range bound. I mean, if just looking at this data, the chart, high, high, low, low, we really haven't gone anywhere. We are riding support to the upside here, this blue channel, big picture. Short-term channel, this orange channel has been, the current trend that we have essentially traded in and out of. We had bought gold here on this weekly settlement and booked our profits there, so that worked out nicely. Here things are a little bit tight as you broke here. There was not much opportunity to capitalize, so there wasn't very. It's been kind of tough to trade. I mean, this was really the primary identifiable opportunity. To the downside, it's just quite difficult. But we are gradually rising. Support is gradually rising. I just don't see anything super sexy here to buy. You could consider this as a buy signal, place a stop below here, and then look to overcome this channel, but we have since failed to maintain above this. So even running a stop below here for gold, if you wanted to be bearish, I would place my stop at 1785, and somewhere in this area if you bought it. You could ideally see 2018 again, that structure retest if we did finally get a push. Not a bad idea. At this point, I would probably want to, you could put a counter trend line break in here or some kind of something in this structure to try to wait for some form of confirmation. Again, I like this. This probably offers us 1+%, which is what my rule of thumb is, and it did not. So it was 0.8. So we really haven't seen a viable buy signal yet. We would need to see something, close up in this area here, give us 1%, and then we could potentially consider buying, buying with a profit target up in this area. So with that being said, we're just kind of waiting. If it comes along, great. If it doesn't, it is what it is. If it's going to go higher, some catalyst will make it pop, and that will be our opportunity. Crude oil. Big picture, obviously we're in an uptrend. You can see this is the negative 40 COVID low. And we've just kind of ground our way, slow grind all the way up to where we are. Peaked out here. This knee-jerk reaction was, again, the Ukraine-Russian invasion. Then price kind of settled and consolidated, but we do continue to kind of push to the upside here. We did break a little bit here, but we didn't confirm. So even with that being said, we settled nicely here. This past week we had broken below, but price action really kind of settled right back at that line. I don't think this trend is over. I just think it's going to take a little bit of time. This is the 2008 high at about 147. We would like to see this price action again close above this purple structure here at about 115 in order to see this push much higher. Our time objective for this initial breakout here, which was the trigger to buy, was about 3 to 5 months. In my service, the Special report, we had bought options that expire in January of 2023. So we have plenty of time for this to continue to work its way up. The trend remains intact, series of higher lows and higher highs, and we just had some profit taking, some rollover. It doesn't, it's this. I don't believe this was a trend changing event. So we're still trending. It's just going to be a little bit it's going to just take time, and we realize that with these big picture moves, these 3 to 5 month projections, typically the market doesn't go straight up or straight down in the direction. It typically lags a little bit, and that's normal. Next up, dollar index. So this has been the strength. Within the market, this is what essentially has been trading inverse, where gold typically trades inverse. In this instance, the dollar index is doing just that. As there's weakness, dollar index goes higher. As there's strength in the market, dollar index sells off. So you could see, upon these relief rallies, this sells off. As the market weakens again, this goes higher. So we do have a firm area of resistance here we need to overcome at 105, and that would then potentially push us outward towards the 110 area. So we're waiting essentially to see this breakout. We just haven't seen it just quite yet. So there's still some more, there's a bigger, heavier push here that needs to happen before we consider buying it. That's just where we sit at the moment. And Bitcoin, last but not least, is the last thing we will cover today. So you could see this structure represents, this big consolidation period. We have this very, very large breakout. We've defined resistance. We've defined support, resistance, support. Here is where the balance changed. This is where the sellers became in control, and you can see the weakness continues to exhibit. So big uptrend push here, and then you can see the structures to the downside have developed. So again, continued weakness in the crypto sector. Not as low as we were. We were in the 17,000 handle at one point in time. Currently, we're trading in the 21,000 handle. It's just not as strong as it once was, for lack of a better term. What am I looking for? If we're looking for a floor here, or at least a near-term floor, I would ideally look right to this structure right here. Somewhere in this 15,000 handle should likely contain this. It could go higher. It's possible. We could even push this back a little bit here and see if this makes sense for us. We'd have to redraw it. But yeah, it's essentially this 15,000 handle is probably a ideal area. I'm not saying to buy it there, but an ideal area that if you are short cryptos, that it may be a good idea to take some profit off, only because I would expect some hesitation or at least a bounce. You could see when we retested support here, we had several weeks, even a couple months of upside, and then before we fell again, and it took the opportunity to break below it. So that covers our major market update for the week. We covered the Dow, the Nasdaq, the S&P, the Russell. We covered gold. We covered oil. We covered the dollar index. We also covered Bitcoin. So I hope you found this informational. All of these images have been publicly published and they are updated in my TradingView account. You can simply find it. I will show you what that looks like. You go to tradingview.com, you search Special Analysis. It's a picture of myself and my wife, and all of this is here for you. All you have to do is click on it, the image will pop up, my thought process will pop up, and you'll be able to access all this information for yourself. If you choose to, you can follow me on TradingView, and if you do that, every time I post an idea, you will be alerted. You will get an email saying, hey, Special Analysis has posted an idea. Click the link to go see it. So if you want to just make life convenient for yourself, that every time I put an idea up that you can go right to it, it will be there for you if you so choose. Outside of that, if I could just ask a simple favor in return for producing all this for you 100% for free, and that would just be if you could, below the video, like, share, and subscribe so that others can find it, view it, and enjoy it for themselves as well. But with that, I appreciate you. I'm humbled that you've taken the time to share a little bit of it with me today. I hope you have a blessed and profitable week, and I look forward to speaking with you tomorrow.